Most people think gold is just a shiny metal, a relic of ancient kings, a decoration, but what if I told you that every time gold explodes in value, something in the global financial system is quietly breaking? And right now, the surge in gold isn't random, it's a warning, because behind today's skyrocketing price lies a deeper story about collapsing trust, failing currencies, desperate governments, and a world drifting toward a financial reckoning no one wants to admit is coming. Gold isn't rising because it's becoming more valuable. Gold is rising because everything else is losing credibility, and this raises a terrifying question. If gold is the last safe haven, what exactly is the world running from? Today, we uncover the answer. The financial system was built on confidence, not gold, not silver, not anything tangible, just belief. Belief that governments will pay their debts. Belief that central banks know what they're doing. Belief that paper currency has value, but belief is fragile, and the moment it cracks, people instinctively run back to the one thing that has survived every empire, every currency collapse, every financial crisis, and every war in human history. Gold? But to understand why it's skyrocketing now, we have to rewind to the moment the world separated money from reality. The year is 1971. President Richard Nixon appears on television and announces something the world never expected. The U.S. dollar will no longer be backed by gold. This single decision, known as the Nixon shock, collapsed a financial system that had existed since World War II. A system where currencies were tied to gold, and there was a limit to how much money any government could create. But when Nixon removed gold backing, the world entered a new era. An era of unlimited money, endless debt, and booms built on illusion. For the first time in history, nothing stopped a government from printing as much money as it wanted, and they did, year after year, crisis after crisis, each printing spree making the system more unstable, more fragile, and more dependent on inflation. Gold felt the vibrations first. In 1971, gold was $35 an ounce. By 1980, it had exploded to over $800, not because gold changed, but because the world's money did. Every major surge in gold follows the exact same pattern, caused by human decisions, political mistakes, and economic denial. Governments overspend, debts pile up, inflation starts rising quietly, central banks say it's temporary, people begin losing trust. Investors flee to gold, gold skyrockets. Governments panic and attempt fixes. The fixes fail, gold rises again. This cycle has repeated for 50 years. But today, it's accelerating faster than ever. Why? Because the world is now drowning in a level of debt the past generations could not even imagine, and slowly, the illusion that everything's under control is collapsing. In 1990, the total global debt was about $50 trillion. Today, it has passed $350 trillion. That's 7 times more debt in just 30 years. Governments, corporations, households, everyone is borrowing to survive. And the more they borrow, the weaker currencies become. Gold doesn't rise because gold grows stronger. It rises because paper money becomes weaker. But the alarming part, for the first time in modern history, every major economy is collapsing into the same debt trap simultaneously. The U.S. is now over $35 trillion in debt. Japan's debt is so large its currency is melting. China is battling a real estate crash. Europe is facing shrinking economies and aging populations. Emerging nations are drowning in IMF loans. Every country is making the same mistake, and gold quietly is reacting, because deep inside the financial system, something is breaking, and the people who see it first, central banks, are already running toward gold. Here's the twist no one expected. Central banks themselves are now the biggest buyers of gold on Earth. These are the same institutions that created the modern paper money system, the same institutions that tell the public inflation is under control. The same institutions that laughed at gold for decades, and yet, they're secretly buying more gold than at any time since the 1960s. Why? Because central banks understand something the public does not. When trust in currency collapses, only gold can rebuild it. China has been buying, Russia has been buying, India, Turkey, Poland, entire governments are quietly preparing for a future where their paper currencies may not survive, and when central banks start buying gold, it means the system itself is preparing for impact. This leads us to the real question: What impact? The first cracks are subtle, almost invisible, a slight weakening of the dollar, a quiet conversation in central bank corridors about the future of fiat. Yet, beneath the calm, the foundations of our global financial system are trembling. Across the world, whispers grow louder, BRICS nations openly discussing a gold-backed alternative to the dollar, a currency that isn't tied to U.S. debt, one that the West cannot manipulate with endless money printing. It's a plan that terrifies traditional powers because it threatens the very leverage that has kept them dominant for decades. Meanwhile, central banks are buying gold at levels not seen in half a century. Not in small amounts, but in staggering volumes, record-breaking amounts. The world's monetary architects know something most citizens don't. Trust in governments is eroding. People are losing faith that paper promises will hold value. Inflation gnaws quietly at purchasing power. The numbers are published, discussed, yet rarely felt immediately, until suddenly they are. And then there's global debt. Trillions upon trillions borrowed, leveraged, and repackaged in ways only the most sophisticated investors understand. The house of cards teeters closer to collapse with each passing day. Gold, the eternal refuge, gleams brighter against this backdrop. History whispers its advice. When confidence in paper fails, tangible assets endure. History has a dark sense of humor. Every time the system nears collapse, a so-called fix emerges. But each one sows the seeds of the next crisis. Remember 2008, the collapse of banks triggered by mortgage mania. Governments and central banks intervened with trillions in bailouts and new policies. But what was the cost? Quantitative easing, the creation of money from thin air. At first, it seemed miraculous. Markets stabilized. Confidence returned, superficially, then came COVID-19. Governments unleashed an even greater torrent of money, printing at unprecedented speeds to cushion their economies. Bank deposits swelled, stock markets boomed, yet ordinary wages stagnated. The same old lesson: injections of liquidity fix symptoms, never the disease. And now, banking failures make headlines again. Regional banks topple, systems wobble, and everyday people glance nervously at their accounts, asking, "Am I safe?" The truth is stark. Each fix inflates an even bigger bubble, and when the bubble bursts, gold is the one asset that has never failed to survive, and often thrive in chaos. Numbers don't lie, but they do terrify. Between 2024 and 2026, gold surged, double, triple, in some cases even quadruple its pre-pandemic value. Central banks, China, Russia, India, bought at a pace unseen since the 1970s. Even billionaires, notoriously private, quietly shift vast sums into gold. Why? Because they've learned the patterns history has been repeating for centuries. The fall of Rome, the overextension of the British Empire, the high inflation of the 1970s, each era echoes today. Rome debased its currency to fund wars. The empire expanded far beyond its means. Citizens lost trust. Gold fled to safer hands, and the collapse followed inevitably. The British Empire relied on the pound and colonial exploitation. But every overreach sowed instability, and gold quietly accumulated in private hands as empires faltered. Fast forward to modern times. Paper currencies lose purchasing power, debts balloon, governments print money to cover obligations, and the public notices only after it's too late. The parallels are chilling, and the numbers confirm the pattern. Gold is not just a relic. It is the compass pointing to financial survival. So, what does this gold surge really signal? Three truths, undeniable, stare us in the face. 1. Gold as a barometer of trust, when people, and more importantly, institutions, buy gold aggressively, they are signaling distrust in paper money. It's not greed, it's caution, a silent alarm. 2. Impact on ordinary citizens. If history repeats, those who rely solely on cash or digital balances may face erosion of wealth. Inflation may silently strip value, debt may rise, and market corrections could strike without warning. Meanwhile, those who hedge with tangible assets, gold, silver, other real-world stores of value, will be better insulated. 3. What comes next? Predicting the exact moment of financial upheaval is impossible, but patterns suggest rising geopolitical tensions, currency realignments, and continued debt stress. Gold will continue to be the safe harbor, the escape hatch, the ultimate hedge against instability. In essence, this is not just about investing. It's about awareness, about understanding that the financial world we've taken for granted may be on the edge of transformation, and that history has a habit of repeating itself for those who ignore it. The camera of history captures the same story over and over: greed, overreach, and the eventual flight to safety. Gold gleams in the shadows while paper promises crumble. Ask yourself, when trust collapses, where will you turn? Will it be a digital ledger that may fail, a bank that may shudder, or something tangible that has survived every collapse before it? This is not a call for panic, it's a wake-up call. Study, understand, and prepare. Watch the numbers, watch the moves of central banks. History does not forgive ignorance, and now I want to hear from you. Are you noticing these patterns around you, or do you think gold is just another bubble? Comment below with your thoughts. If you want to explore more hidden truths behind money, finance, and global crises, hit that subscribe button. The Fiscal Archivist is here to guide you through the history, the signals, and the dark undercurrents that no one else dares to show. Because when the world shakes, knowledge is the true safe haven, and sometimes a whisper about gold is the only warning before the storm.